what's an investor to make of the market right now? Lee Munson is CIO at Portfolio Wealth Advisors, and he joins us now. Lee, we have not seen a lot of red days so far in 2019, and at times the buying has looked almost frantic. So what do you make of this market right now, just in general?
Oh, I love it. I love the franticness of it. Remember when we were sitting here in late December on Christmas Eve, or a couple days before Christmas Eve, and the selling was paralyzing, it was frantic. I mean, honestly, that was just a bunch of computerized algorithmic programs pushing the market down. The funny thing is that actual human beings are buying on the way up, which I find phenomenally interesting. Here's the bottom line. I think we've got to get to about 2,800 on the S&P. At least 2,750 is my whip out point, but I think we're going to do it. There's earnings. I mean, look at Twitter. We're acting like everything's okay with Twitter. Earlier this week, the earnings from General Motors, please, it's pure spin. So earnings aren't that great. They're just not as bad as we think. I think the market goes higher, but you have to have a point where you're going to sell stuff. And that's what I want to talk to people today about.
Hey, Lee Munson, Jen Rogers, do you have any cash left on the sidelines, or did you put it all in?
I have a tiny little bit left if I was wrong. So essentially, I don't have any cash left. I mean, my bottom number on Christmas Eve was 2,350 on the S&P.
I remember.
You know, I've got like, these stickies back here.
Those worked.
So, yeah, and the thing was, I had a client said, well, what's below 2,350? I said, nothing's below 2,350. I wasn't really planning on being here so fast. So as a professional manager, you know, I always have like 1 or 2% left, but it's only in case of emergencies. So I would say that if I see 2,750 pretty soon, which we almost had this week, or 2,800, I'm going to take all my overweights off. I know that sounds crazy, but I'm going to go back to neutral. And here's what none of you think you'll ever hear from me.
I'm ready.
If I see the S&P in the next couple months at 3,000, I'm going to start to underweight U.S. equities all across the board, and and sit in a little bit of cash, maybe 5 or 10%. So that's the big, like, crazy call right now.
So, Lee, it sounds like your risk right now is that the market runs too high too quickly. Now, today's action is being driven by concerns around trade. That story obviously has not gone away, even though it didn't get a ton of play over the last month. I mean, how much are you thinking about that, looking at the market over the next couple of months? It certainly doesn't seem like you'd love to see the market go to 3,000, because then it feels like something's wrong. But where do you see this thing going, in the most likely scenario, I guess, over the next 3 to 6 months?
Okay, here's what I think is going to happen. We're all waiting. We're all trying to fade the rally right now. Every hedge fund out there, everybody's going to say they're bullish. We're all just trying to take our overweights off and trying to book in a profit for Q2, Q1, and go brag to our clients. So March 1st is a big problem for me. That's the first fake, phony date that we're going to get this trade. By the way, trade is the only thing we care about, right? Like China trade, that is the only thing that anybody cares about in my world, in this little office. So I have to figure out how high can I get the market before this March 1st deadline, which will come and go. Nothing's going to happen on March 1st. But that's the point when people start to realize any deal is going to be watered down, and there's nothing that's really going to happen so many months from now. And that, I believe, will cause the market to be on sort of a buyer strike, and we'll see it come down. And then you have risk of retest. So I'm trying to figure out, how do I take some profits as quickly as possible this month? Because after March 1st, I'm going to have a lower level that I need to take those profits off. And then the other thing is also the 10-year Treasury. Come on. Look at the 10-year Treasury now. The yield is saying we're going to have a retest of 2350 sometime later this year. I want to have some cash before it happens, right? A 2.65, this is ridiculous. If the market was really okay, the Fed would have said we're going to raise a couple times this year, and this thing should be at a 3 handle. So I say, do what you need to do, but fade this rally over the next month, not 2 or 3 months from now. And if it goes any higher, get some cash. We're going to retest 2350, and if we don't, great, I was wrong, but I'm going to prepare for it.
All right, you heard it here first. Lee Munson, Portfolio Wealth Advisors. Thanks so much.
Always fun.